Ontario is the only province in Canada where home prices are expected to keep falling in 2026. Not slowing down, not flattening, actually falling. While Saskatchewan, Quebec and Newfoundland are posting record benchmarks, Ontario's average home price is down nearly 5% year over year. Active listings are sitting almost 50% above the 10-year average, and the sales to new listings ratio has dropped to 36%, which officially puts the entire province in buyer's market territory. Something broke in Ontario's housing market. And it's not just Toronto. The pain is spreading across the GTA, into the suburbs, and even into cities that most people assumed were too small to be affected. These 10 cities show exactly where the damage is. First, Toronto. No surprise here, but the numbers are still striking. The average home price in the city of Toronto is now around $1,023,000. That's down almost 8% from last year. Condos are getting hit the hardest, down over 9% year over year. Active condo listings are piling up, nearly 5,000 on the market against fewer than 1,000 sales. The problem is simple. Too many investor-held units hitting the market at the same time. Pre-construction closings keep adding supply, and at current rents, a lot of those investors are bleeding cash every month. If you're a buyer looking at Toronto condos, you have more negotiating power right now than at any point in the last 5 years. Sellers are offering incentives, covering closing costs, dropping prices. That wasn't happening 18 months ago. Second, Mississauga. Mississauga home prices are down 7.6% year over year. That's actually worse than Toronto's overall decline. The average home now sits around $971,000. Mississauga has always moved in lockstep with Toronto. When Toronto cools, Mississauga follows, but often harder because it doesn't have the same density of high-income buyers to absorb the correction. What's worth watching here is days on market. Homes are sitting for nearly a month now. That's a massive shift from the 24-hour bidding wars of 2021 and 2022. Third, Hamilton. Hamilton is seeing one of the steepest drops in the province. Average prices fell 8.6% year over year to around $721,000. Hamilton was one of the pandemic darlings. Remote workers flooded in from Toronto looking for space and value. Prices surged. But here's what happened next. The remote work wave slowed. Interest rates climbed. And a lot of those buyers who stretched to get in are now sitting on properties worth less than what they paid. The correction here feels personal. It's not just numbers. It's people who timed the market wrong. Fourth, Brampton. Brampton's average home price is down 6.5% year over year to around $892,000. But here's what makes Brampton's situation different. A large portion of the local economy is tied to trucking and logistics. Economic uncertainty and job insecurity in those sectors have sidelined a lot of potential buyers. Listings have surged, up nearly 20% year over year. And first-time buyers, who make up a big share of this market, are now looking at townhomes in the $600,000 to $700,000 range instead of stretching for detached homes. Brampton is becoming a negotiation market. Bidding wars are basically gone. Fifth, Vaughan. Vaughan home prices are down 6% year over year. This is a market that was built on growth. New subdivisions, master-planned communities, families buying into the idea of suburban GTA living. But when prices correct in the GTA core, the suburbs take the hit too, especially the ones that were priced at a premium. Vaughan is still expensive. But the gap between what sellers want and what buyers will pay is widening every month. If you've been eyeing Vaughan and couldn't afford to get in before, the conversation is very different now. Sixth, Markham. Markham is down 4.8% year over year. That's actually a smaller decline than most GTA cities, and there's a reason for that. Markham has a strong tech and professional services base. Higher household incomes provide a floor that some other suburbs don't have. However, the condo segment here is still under pressure, and any further weakness in the tech sector could push that number lower. Markham is holding up better than its neighbours, but it's not immune. Seventh, Kitchener-Waterloo. The Kitchener-Waterloo Cambridge corridor saw prices drop 5% year over year to around $733,000. This area boomed on the back of its tech scene. Young professionals, startups, proximity to two major universities. But the same forces hitting Toronto's condo market are showing up here, just on a smaller scale. New condo supply, weaker absorption, cautious buyers. CMHC has specifically called out Kitchener-Waterloo as one of the Ontario regions where housing starts will continue to decline. That means fewer new builds going forward, which could eventually tighten supply. But right now, buyers have choices they haven't had in years. Eighth, London. London's average home price is around $627,000, down about 2.5% year over year. The decline here is more modest than the GTA cities, and that tells you something important. London didn't spike as aggressively during the pandemic. The correction is proportional to the run-up. Markets that went parabolic are falling the hardest. Markets that grew steadily are holding up better. London still has a solid healthcare and education economy. Western University keeps a steady flow of renters and young professionals coming in. This is more of a slow leak than a crash. And for buyers, that might actually be the healthier market to step into. No panic, no frenzy. Just a gradual return to something that resembles normal. Ninth, Ottawa. Ottawa just became the first major market outside the GTA and BC to post year-over-year price declines. The benchmark price is down about 2%. Average price sits around $693,000. What makes Ottawa different is the public sector. Government jobs provide stability, but they also cap the upside. When prices get too far ahead of what civil servants can afford, the market corrects. That's exactly what's happening. However, month over month, Ottawa actually rose 4.5% in March. So the decline may already be bottoming out. This one is worth watching closely over the next few months. 10th, the broader Northeastern Ontario region. This includes cities like Sudbury and surrounding areas. Average home prices here dropped 6.9% year over year. That's a steeper decline than most people would expect from a part of Ontario that never had a major price run-up. But here's what's happening. Mining and resource sector uncertainty is hitting confidence. Population growth is flat or negative in some of these communities. And buyers who might have looked north during the remote work era have pulled back now that return-to-office policies are tightening. Northeastern Ontario is affordable, but it's also fragile. The declines here aren't about a bubble popping. They're about demand simply drying up. So, what does this all mean? Ontario is the epicenter of Canada's housing correction. Prices are down nearly 5% province-wide. Inventory is at historic highs, and the province's recovery is expected to be slower than almost every other region in the country. But here's the flip side. If you've been priced out of Ontario for the last 5 years, this is the window. Not because prices are cheap, they're not. But because for the first time in a long time, you're not competing against 30 other offers on every home. The power has shifted. The question is whether you're ready to use it. What Ontario city are you watching right now? Drop it in the comments. I read everyone.